Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, if there's one headline that probably encapsulates best what's been going on in the last week, it was one that appeared in the Financial Times, and it was US government bond investors left bewildered by bonkers market move. And that was describing what we saw, particularly at the back end of last week, where the US Treasury market started to rise, started to gain traction, which means that the yield on the 10-year US Treasury, for example, started to plummet. So it's reversing the trend we'd seen of rising bond yields. So we started to see demand for US Treasuries and bonds generally. And the reason it was strange is because it came off the back of some very positive economic numbers in the US and some more signs that we are likely to see more inflation going forward. And so you'd expect bond markets to sell off and bond yields to rise, but the opposite happened. And so what we're seeing is the market start to react in ways that a lot of people can't really explain. And so you almost tie yourself up in knots. And so to give you an example, what happened is the 10-year US Treasury yield fell from about 1.65%, if you remember last week, down to as low as 1.53% this week. So that's a big move. And of course, what that meant is we started to see another attempt of the unwinding of the reflation trade. It was very good for technology stocks once again. So we saw technology stocks and NASDAQ 100 start to push up towards all-time highs. We saw generally positive equity movements anyway across the board, and that includes not only the NASDAQ, the S&P 500, but also the FTSE 100 in the UK, which topped the 7,000 mark for the first time in a long time. So the FTSE 100 was pushing higher, so it was quite positive sentiment, and we saw bonds starting to also gain a bid. But then once again, we saw that pattern start to unwind a day or two later. We're seeing what I would call like a lot of choppiness within markets going back and forth. From one day to the next, you're seeing markets suddenly fall to only rally again. So we're seeing tech get a bid. And what's happening, a lot of people are starting to get slightly ahead of themselves, announcing that the tech, the growth, investing, the growth stocks are back. And actually the reflation trade and the value trade and the cyclical sectors are starting to go to underperform, and they will do going forward. It seems a bit early to start to call that. I mean, we saw Chinese equities start to rebound and catch a bid. And so where we are at the moment is it feels like a lot what's going on in the football. We're seeing all this news about a European Super League. Those clubs that seem to think it was a good idea to be the first in are now having egg on their face and now trying to repair the damage. Investing at the moment, especially in the last few weeks, has been a lot like that. Those people who try and jump on an immediate trend start to announce that the reflation trade is done, or it's going to amplify and increase, or tech stocks are going to finally start to take the lead again. Those people who were jumping on board of those trends initially are finding they're having to unwind them and being left with egg on their face. A good example of that is tech stocks. Some people have been piling back into those, but then earnings season is now upon us, which is the next big thing that is influencing markets, and markets are starting to take note of. Netflix announced some disappointing numbers, and after hours yesterday, their share price fell by double digits in percentage terms. So there's a lot going on in markets. We've seen gold start to break to recent highs. So if you remember in recent podcasts, I've been talking about the gold price $1,750 in dollar terms per ounce was the level to keep an eye on. It was always trying to push up to that, and it would break back down again towards the 1,700 level. We are now pushing up towards 1,780, possibly as high as 1,800, which would be interesting because gold has lagged. It's certainly lagged Bitcoin, and I'm going to do a piece on this week's main Money to the Masses podcast about the interesting dynamic between gold and Bitcoin, and particularly their prices, to explain some of that. But we're seeing gold now catching a bid. So that's been underperforming, starting to do quite well. Does that mean we're at the beginnings of another rally higher, leg higher in the gold price? I think what we're seeing a lot of at the moment is, I say, this chop. We're seeing defensive assets stopping going down, which has caused some people to perhaps wonder if we're seeing a change in the markets underlying. Are we going to start to see a big sell-off in equity markets? That's why some of the defensive sectors and defensive assets like gold, like bonds, are now catching a bid. But the reality is we're seeing a lot of back and forth. And so, like I said, to use the analogy of the football, those who are jumping in earlier getting left with egg on their face. So it could be we're just in a period of consolidation, and then the market will make a decision, which it inevitably always does, whether to break higher or lower. And so in those conditions, it's quite risky to place a bet on which way the market's going to move next. So it's a case of waiting and seeing. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me, Damien at moneytothemasses.com is the email address. Twitter, money to the masses with a number 2. Of course, don't forget, you can find us on Instagram, Facebook. Don't forget to join our Facebook group, facebook.com/groups/money to the masses. And of course, don't forget to subscribe to our YouTube channel.